All right, you all, it is 6 p.m., so we'll get started. Welcome to Forex for Beginners. We're all a part of Epic. So much value, so much education between all of the master traders and the live classes that you can access in your back office, or the wonderful courses that Coach Max has put together in the back office. The way she's put all those courses together, we want to encourage everyone to study the back office and to go through all the information that's back there. There's nothing like studying on your own, but there's nothing like the live classes as well. And then we have, of course, Coach Max and Ryan DeFreitas have Dynasty Exchange, DX for short. And they have a full schedule of classes there. Be sure to check the schedule that they put out each week for that. And then we're all under DAMO, which is Impact Over Profits. And we have a full schedule as well. So this class is going to be roughly about a half hour when I try to give you some time back, because I know the schedule is so busy with things going on. But we want to have this class just to go over some beginner concepts. Sometimes we tackle some intermediate concepts, but this class is very relaxed. Normally, I'll speak on a topic for about 10 to 15 minutes. Then you guys come off mute, throw questions in the chat, or talk to me and let me know what you have questions on. And we just want to make sure that everyone is engaged. So what we're going to talk about today, and let me go ahead and share this PowerPoint. Oh, and before I forget, all of the classes are recorded on my YouTube channel. So I'm going to post that link in the chat. And so by tomorrow morning, this class will be uploaded there. And what we want to talk about today is literally the first trading strategy or method that I learned as a trader some years ago. I like to call it an oldie but goodie, but there are some master traders and this is the method that they use. So it's definitely more beginner friendly. So Damo and Elise do primarily institutional trading, which may be more intermediate to advanced. But I just wanted to make sure that we kind of periodically go back over this sort of beginner method. And it's really to encourage everyone to go on TradingView, have 1 or 2 or 3 pairs that you study on a daily, weekly, or whenever you have time carved out to study. You want to make sure that I think you'll gain a lot more growth if you can focus on 1 to 2 to 3 pairs. So even if you're in demo, even if you're not trading on your own yet, it's never too early to pick a pair and to begin to do some very beginner analysis. So we've been in Epic for a while, and I have a team, and I can tell some are still a little reluctant to kind of pull up TradingView on their own. So that's what this class is for today, to kind of help you be comfortable, to get you going. We're not trying to push you into a live account or push you to start making trades, but it's never too early just to pick a pair or two and just kind of see what you can see on TradingView. And we'll give you some hints, some tips and tricks, and show you how to slowly begin to do some analysis. And when you're ready, take a trade or two in your demo account. So I know sometimes that can be intimidating. So that's what this class is for today, to really talk about a few simple steps that you can do and show you how simple it can be to actually take a trade using this break and retest method. Okay. And I'll keep an eye on the chat too to make sure if there are questions there. So like we said, the very first step, and if you've been in Epic a week or 2 or 3, or maybe you've been here since the beginning, it's kind of good to associate with 1 to 2 or maybe 3 pairs that you can kind of commit to studying. So in terms of beginner-friendly pairs, here are a few that are suggested. EU. EU is short for Euro USD. AU, which is short for AUD USD. Then we have EJ, short for Euro JPY, and AJ, short for AUD JPY. Now, it really depends on the time that you have. Let's say you're on the East Coast, and let's say you work a traditional 9 to 5 or 8 to 5 shift. So let's say you may have a half hour or an hour in the evening to study and take a look at your pair. Then you may want to choose, and let me pull out my trusty arrow. Okay, you may want to choose one of the JPY pairs, either the Euro JPY or AJ. And the reason is during the Asia session, which starts about 7 p.m. Eastern and goes till about 1 or 2 a.m., the pair, a JPY pair, will have the most volatility there. And that's when you'll see the most action. Likewise, if the time that you have to study is during the New York session, 8 a.m. to 5 p.m., then maybe a pair that has USD would be good. So this Euro USD, it's going to move primarily during the London session, which starts about 2 to 3 a.m. and goes till about noon Eastern. And it's also going to move during the New York session. So if you notice where the currency is located in the world, that's the currency session that it moves the most in. So this AUD USD pair, it's going to move the most during Asia session as well as during the New York session. So that can kind of help you in deciding which pair you want to choose. So when I first started trading, all of my time that I used to study Forex was in the evenings after work. So my pair was actually USD JPY. And we all know that was Coach Max's pair that she traded, for years, just that one pair. So we do want to let you know that there are some pairs and assets that you want to avoid if you're if you're new to Forex and new to trading. You want to probably avoid the indices. So when you hear people talking about the US 30 and the NAS 100, these are very fast moving indices. They are expensive in terms of stop loss. So if you're a beginner and you have a small account, $100, $150 or $200, just know that you want to practice your indices only in your demo account until you can understand how fast they move, how expensive it can be if you take a bigger loss. Same goes with your metals. When you hear people talk about gold and silver, your crypto pairs, your BTC, USD, all of these pairs, not only are they volatile, which means they move a lot, but if you're caught in the wrong direction, you really want to understand how your stop loss affects your profits. So when you're first starting out, just stick with some of these beginner-friendly pairs so you can gain some confidence, get some wins, understand losses, but with very manageable amounts. Okay. So after you pick your pair, now you're going to pull up that pair in TradingView. Now, there's plenty of information in the back office about how to start your TradingView account. I also have a YouTube video that shows you how to get an account as well. But, I want to encourage you, make sure you get that free account. It won't cost you anything. And you want to just, take baby steps towards being able to pull up a pair and doing some beginner analysis. So let's talk about what you're going to do. So we are looking at Euro USD, and you can start on the 1 hour time frame. Now, in the back office, Coach Max talks in detail about top-down analysis. and how you can mark your support and resistance zones on different time frames. To keep things simple, we're just going to stick to the 1 hour time frame. So we're looking at Euro USD, EU for short. We're on the 1 hour time frame. Let me grab my trusty arrow. And here is where you choose your time frame. So here you type in Euro USD and you choose your 1 hour time frame, and you are here. So after we go through the PowerPoint, we'll pull up TradingView Live, and I can show you how to use the different tools. But for now, just imagine that we are drawing horizontal lines. Basically, we want to find all the popular points on TradingView. We want to find the lines where a lot of the tops and the bottoms of the candles are hitting. So if you take a look, each of these blue lines represents a support and resistance, and that's what we mean by marking up our charts. So notice on this line, the candles are stopping here. These wicks are just about stopping there. These candle bodies are stopping there. If we come on over to the right, you can see the tops of these candles stopped here and these wicks stopped there. So that would be a good line that we should mark. Okay, the same thing with this blue line here. And you don't have to worry about being exact, especially when you're first starting. As time goes on, you'll get more and more practice with it, but you're basically just going to mark lines where a lot of the tops of the candles or the bottoms of the candles are resting, okay? So notice this line here, these wicks are stopping here. The bottom of these candles are stopping here, so that's why we chose this line. And if we come down to the bottom, all of these wicks are resting on this blue line here, as well as the bottoms of these wicks are resting here. And with this last line, we have two wicks that are resting here, as well as this wick and this wick. So that's how we identify support and resistance lines. And this is called marking up our charts. So in this case, I'm using really a thin line, and there I'll show you a couple of different tools in TradingView that you can use. Sometimes folks want to mark up a zone instead of just a little line. So I think I'll show you that on the next slide. Okay, so now that we have our Euro USD on the 1 hour, and we have our support and our resistance lines matched, let me just tell you briefly what the difference is. When you see these candles sort of resting, that's what we call support. It's sort of like a floor. And when you have the tops of the candles and you have a line that encapsulates that, that's kind of known as our resistance. You can think of it as a ceiling. So you're standing on the floor, your feet can't go below it, and you're reaching up with your hand to the ceiling and your hand can't go through it. Okay, so let's talk about the basic strategy of trading zone to zone. So we're on Euro USD, we're on the 1 hour time frame. The only thing we've done is mark some of our support and resistance lines. And once we have those marked, now we can look at possible trades from one zone to the next. So in this case, if we took a buy from this zone here, our take profit or our goal would be to get out when we get to the next zone. So that's what's known as trading from zone to zone. And we hit a bit of consolidation here, which means the candles are going sideways. But from the bottom of the chart up to here, we were in a small uptrend. So to be safe, we're probably just going to look for buys to trade with the trend. You've heard that phrase, the trend is your friend. If we were in a sell, if the candles were all going down, then we would be looking for sells from zone to zone. But to stick with the trend, let's just look for buys. Okay, so we're on this 1 hour time frame. So if we're looking to take a buy from this zone to the next, what we're looking for is what we call a break of the zone and a retest of the zone. Okay. And so let's talk about what that means. The break means that the candle is going to literally break upwards through the zone. And then the retest means it kind of turns around and checks or comes back to visit the zone before taking off. And that's what we're typically looking for. So here's our zone, and let me mark it with an arrow. So here is our zone here. So once it breaks through, we're looking for it to come back and retest. And then that's our indication to get in for a buy, and we can ride it up to the next zone. Now, oftentimes you'll notice here that I've jumped down to the 3-minute time frame. So initially, if I go back here, initially we're looking at the chart and we're on the 1 hour. A lot of times we can go down to a smaller time frame, and that may be the 5-minute, the 15-minute. In this case, I went down to the 3-minute because a lot of times you can see the break and retest a lot better on a smaller time frame. So if we come down, we'll notice that the candle, we have the price action we're looking for. It sort of breaks through, and then it kind of revisits, and it doesn't quite reach the zone. But this is an excellent time to show you why some people prefer to use a rectangle for a zone instead of a line. So if I had used a rectangle for my zone, a lot of times it allows you, and let's fill that with a lighter color so that we can still see the candles. Yeah. A lot of times when you use a rectangle, you can catch part of the wick as well as the candle body, and it gives you like a bigger area to target. And by doing so, we can see here that price kind of broke through, came back to revisit, and then kind of took off. So once we saw that, that would give us our indication that we could go in for a buy. And I'll show you a live example on the charts too. So if we're taking a buy from this zone, then this TP, which stands for take profit, this is our goal. So if we enter the buy here at this zone, this is where we would enter it. And then we would get out once price made it to our take profit, which is our next zone. And that's called trading zone to zone. So what I really like about this strategy is that you can do it on any time frame. So if you don't have a lot of time to take trades, or if you don't have a lot of time to watch the charts a lot during the day, some people prefer to trade on a higher time frame. Maybe the 1 hour, the 4 hour, the daily. It may take several hours throughout the day for that trade to start and finish. So once you enter that trade, you need to set your stop loss and your TP, and then you should feel safe enough to be able to walk away from it because you've put in the parameters that you need. So let's talk about where you would put the stop loss. When you're trading zone to zone, you really want to get an entry as close to the zone as possible because your stop loss is going to be on the other side of that zone. So if we have an entry somewhere here, our stop loss is going to be underneath the zone or preferably underneath the last candle. So let me try to zoom in here. In this case, I would have my stop loss here because it's underneath the last candle that entered that zone. Because the thinking is price is going to take off and go to the next zone. If for some reason price dips below this previous candle, then I have my direction wrong and I need to exit this trade. So what happens is the closer that we can enter this trade to the zone, our stop loss will be nice and tight. Sometimes what happens is price takes off and we say, oh gosh, fear of missing out, FOMO. Price is taking off. I was waiting on this trade. I need to jump into the buy. But what happens if we enter here after this candle? We definitely want to wait till the candle closes. But what happens if we enter the buy here? Price is already a third of the way to the zone, and we are in immediate drawdown as this red candle shows price coming back to retest or recheck the zone. Now, will there be times where price just takes off, doesn't come back to retest, but just goes straight to the zone? Yes, there will be times that happens. There will be some trades that we'll just have to miss out on because there was no pullback to the zone. It's better to allow price to take off a bit, wait for the retest, and then get in on this third candle, and we can have a more reasonable stop loss. The problem with entering here at the top of that wick is that we still need to have a stop loss that's on the other side of the zone. So the further price is away from the zone when we enter, the bigger the stop loss we need. And now, we talk about our risk to reward. Now we don't have a really good risk to reward ratio. When we enter closer to the zone, our stop loss is on the other side. That's our risk. And our reward is all the way at the TP. So let's use, let's see, this blue candle will be where we enter. Let's use a red candle, a red arrow to show where our stop loss is. And let's use this blue arrow to show where our take profit is. So we want as much space between our entry and take profit as possible. And we want a small space between where we enter and where our stop loss is. And the reason that is because this area in between the blue arrow and the purple, that's our reward. And then this area between the blue arrow and the red, this is called our risk. So we want a small area that defines our risk, and we want a much bigger area that defines our reward. So in the chat, let me know, put a 5 in the chat if you can understand the difference between the risk and the reward. I want to make sure I've explained that well enough. So the risk is going to be between the blue arrow and the red. Great. And your reward is going to be between the purple arrow and the blue. This is called our risk to reward ratio. Okay. So we always want as small a risk as possible and as big a reward as possible. Why is that? Because sometimes we're going to lose a trade. You know, we're not going to win every trade, but we want to. If I there's this saying that says you want to live to trade another day, and so imagine that if we entered the trade here. So now our reward gets a little smaller and our risk has gotten bigger. The problem with this kind of trade is that if we lose 2 out of 3 trades, we've really taken a big dip in our account. This risk is eating up our trading account, and we need that trading account so that we can trade the next day. So we want to enter as closer to the zone as possible so that we can keep our risk small. All right, so let's hop over to TradingView and look at maybe a live example. Okay. So we are looking at AUD, USD, AU for short. And we are on the 1 hour time frame. So let me just get rid of these zones so I can walk you through start to finish. All right, so you've decided that AUD, USD is one of the pairs that you will study. Let's see, is TradingView gonna let me delete that line? There we go. So we've pulled up AUD here. We're on the 1 hour time frame. Always do reset chart to get a nice bigger view. And look to your left and click on horizontal line. So all it takes is a few clicks and you'll have the tools that you need to be able to mark your zones. So I'm going to mark a zone there because I see that these candles are resting here and these wicks are resting on this line. And also between the top of the candles and the wick is resting on this line. So I'm on a PC, so I'm just going to do Control C, Control V, and that's going to give me another one. I'm going to place it somewhere here. Now, remember, don't get hung up. It doesn't have to be perfect. No 2 charts, if you put 2 traders in the same room and they mark up their charts, normally they're going to look a little different. Some zone you may see that your friend may not see, and vice versa, but it's okay. So this blue line here is going to cover the top of these candles as well as the top of these wicks here. So I think I'm happy with that one. Then I think I'm going to pick this area here. And now let's do some more at the top. I'm going to choose this area because I see wicks here. I see the top of these candles and a wick here. I see these wicks are covering it. You really want to choose lines where a lot of the candles are either reaching up to touch or sitting on and resting on, okay? And maybe one more near the top. I think I can choose it there. Some really like to focus on those top wicks. Others really like to make sure you do the candle bodies, but here is why you can use a rectangle. So the second tool gave me the horizontal line. If I want to go for more of a zone, I can come down to icons, choose rectangle. And what this rectangle will allow me to do is have a bigger area. And I can just move that there. And in this case, I can get the top of the candles as well as the wick. So you have a choice. And for either one, you can right click and go to settings and choose your background color. I like to make sure the opacity is really low. That way I can still see the candles and the price action that's going on. Same thing with the lines. You can right click on it, go to settings, and choose what color you want for your zones. Some like to color code their zones based on the time frame. So top-down analysis, you may go to the 4 hour and make all of those zones one color. Then you may come down to the 1 hour, make those zones one color, come and so on and so forth. So you have a lot of flexibility. But, oh, I see a question in the chat. What do you mean when you say choose the line where a lot of candles are resting? Do you mean 2 or more candles are resting? Yeah, so what we mean by that, Nathan, let me use my trusty arrows. Look at this purple line. We have these wicks that are landing there. And if I click on this one, there we go. So those wicks are landing there. Let's use another one. The bottoms of these candles are sitting or resting on the purple line. If I come here, the top of these wicks and that candle body is really close to that purple line. I see another wick, two wicks actually, that are coming very close to that purple line. So this line that I've chosen here is sort of support for these candles because it's like they're standing on the purple line. So they're serving as support. For these candles here, this purple line is like the ceiling. The candles are reaching up and they can't really get past it. So that's what we're looking for. We're looking for lines where the top of the candles are touching or the bottom of the candles are sitting. So hopefully that makes sense. Where the top of the candles are touching it, in this case, or where the bottoms of the candles are sitting, in this case. And that's all you're looking for. So with this blue line here, you can see that the top of the wicks are touching it. Look at this wick. It's touching it as well. It's reaching up and the top of it is touching that line. And oftentimes what you'll find is that when you look right or when you look left, there's other candles that are touching the same line. That lets you know that that's a good support or resistance. Here you can see these candle bodies are sitting on that blue line. And then you can look here. The top of these candles are just about touching the blue line there. So, and with this zone that we created, we can see that there's a lot of activity here. So in this zone, you have the top of the candles as well as the wicks. And I bet if we look left, we may find other activity as well. So what's really cool about this rectangular zone, if I extend it to the right, look what happens. Now, this wick is just about reaching that zone there. And I bet if I continue looking left and I continue extending this line over, oh, here's an easier way to do that. Let's right click on settings, extend left. Isn't that a lot easier? So what do we see? We have a lot of activity here between the candles and the wicks. We have activity here. And look at the other zones that we drew as well. Let me get rid of those. See, we drew these zones based on the current, but as we look left, you'll see that AUD USD has respected this zone a lot in the past as well. So this zone that we drew, we have a lot of activity here. We have wick activity here, wick activity there. So that's the cool thing about zones, is that when you mark up your chart, say on a Sunday or a Monday, you can find zones that this pair will respect for months to come, even years to come sometimes. So once you mark up your chart once, you may be able to keep that markup for a while. You may have to move some zones around if price changes a bit, or you may have to add new zones. Maybe if the price is making new highs or making new lows. But for the most part, once you mark up your chart, you'll be surprised at how long some of those zones will still become relevant. Any other questions? And you guys come off mute. Any other questions about marking up your support and resistance zones on this 1 hour time frame? I really hope that everyone on the call is either already doing this or can start doing it. Yeah. So, don't worry about being in your live account, and, you don't have to be taking trades every day. But this step, I find, if I'm being perfectly honest, those who are happy with their progress are definitely doing this step. And those who are ready to take that next step, or who may be stuck, are not doing this step. So that's the purpose of this call, is to kind of remove any roadblocks, because we want everyone to be able to go to TradingView, put in your pair, and then mark basic support and resistance lines. We don't want there to be any intimidation with that. Because guess what? If you even have 10 or 15 minutes, you can go to this pair and say, what is AUD? What is AU doing today? Well, I see it's in an uptrend. I can see that. And if I come here and mark a trend line, I can see that AU is, let's see, where would I do it? I'd probably do it like that. Yeah, I can see that AU is in an uptrend. So automatically that tells you that you're looking for buys, because you want to trade with the trend. So now let's look specifically at a possible trade that we could have taken in the past. So notice I have this area here. Let's say price, and I'm going to get rid of some of these arrows so that we can focus. So let's say we wanted to look at price action here at this zone. And you want to know, price is approaching this zone. Should I buy or should I sell? Okay, so let's say that we can't see. Let's just kind of block price out for a bit. I don't want it extended. Okay, so we're just gonna block price out for a bit. Let's make it kind of dark so we can't see those candles. I'm gonna make my opacity 100%. All right, so let's say price is here. And it looks to be that it's going in an uptrend. So possibly we could do a buy from this point up here. So what we would do, and that's why I've highlighted this green area. Let's go down to a lower time frame. And once we do that, we're going to have to scroll left. So let's scroll left. There we go. So remember, we were on the hour time frame, and there's an area that we had identified. And what we can see, let's try the 3-minute. Let's scroll left. Neary, yeah, replay would be, it would be a lot faster. I think I want to, when I do replay, I want to show everyone how to do it, and it'll be, I think, a class on its own. My trading view is acting really slow today. There we go. So on the 3-minute, let me kind of zoom in. Right. When we look at this area on the 3-minute chart, because we're going to see so many additional candles, here is the pullback that you would not see on the higher time frame. So this is the candle that we would wait for on the lower time frame, because that would give us, with this next candle, an entry that's closer to our zone. Because on a higher time frame, you know, we only saw this green price action. And so that entry would be here, farther away from our zone. And when we come down to the lower time frame, we can see this pullback. So that would give us an entry here, closer to our zone, which can give us a smaller risk, because, you know, we're going to have our stop loss somewhere underneath one of these more recent candles on the other side of the zone. So the whole goal is come down to a smaller time frame so you can find a pullback. And a pullback is when it comes back to test or touch this zone here. So we want our entry to be as close to this zone as possible. And so going back on that hour time frame, let's get rid of this box. See, we can't see the pullback. If I zoom in here, all we see are green candles. We cannot see a pullback. And so if we go down to that smaller time frame, we got that red pullback candle, which gave us an entry closer to the zone, giving us a smaller risk and a smaller stop loss. And that's the name of the game. And so, you know, let's talk about, as we wrap class up, how price moves. So we got into this buy, you know, maybe here. Price got pretty close to our take profit. Then we had a pullback, and then it rode to the top. So definitely get accustomed to pullbacks and how price moves. Sometimes it can go straight to your TP. That's an easier trade. You don't have to sweat it all. In this case, we had a pullback that came kind of close to our entry before price took off and hit TP. This is why we demo, because you imagine seeing all of your profit, your 80% to your TP, and then we have a huge pullback. You're not red because hopefully you got an entry close to your zone. So you're not red when price pulls back, but then it takes off and you can hit your TP. So, you know, there are times that if you're watching the trade, then you may decide to take profit here. That is close enough. If you want to ride it out, then you can just be in the ride for the pullback, and eventually you'll make your take profit. And Nicole, the question is entering on a smaller time frame, like the 3-minute, better than on a 15-minute? I guess the point is, if you're looking on the hour, a lot of times you won't see the pullback on the hour. And so you may see that pullback on the 15-minute. If you don't, then try the 5-minute or the 3-minute. The point is you want to see, you want to get to a smaller time frame just so that you can identify that pullback candle so that you can get an entry as close to this zone as possible. So if you can get it on a 15, that's perfect. If you don't see it and you're hunting for it because you feel like this trade is going in your direction, but you want to get that better entry, then go down to a smaller time frame just so that you can get that pullback candle. So wherever you can see it is fine. Sometimes you'll see it on the 15 minute. Sometimes you may have to go on the 5. There are times that you'll see it on the hour, and that's great, but a lot of times you won't. And if you were only looking at the 1 hour time frame, you definitely want to wait until the candle closes. And with all of these candles being green, you may not want to enter off this candle because you don't see a pullback, and the next candle could come down and retest and you'd instantly be in drawdown. So this is why you would go down to a smaller time frame, wait for that red candle to pull back and get kind of closer to the zone, and then go in for your entry. Any questions, guys? Feel free to come off mute as we wrap up. What questions do you have? I hope everyone is feeling encouraged that you can do this. You can absolutely go into TradingView, pull up AUD USD, go on the 1 hour time frame, mark, take a baby step and just mark 2 or 3 zones. You can absolutely do it. It doesn't have to be perfect. You're going to come here, use this horizontal line tool if you want to keep it super simple. And then, before you take a demo trade, just watch how price reacts at this zone. Sometimes it may go straight to take profit. Sometimes you may have a huge pullback in this case. So you have to decide, are you more of a scalper where, we have the phrase pip and dip, where you get your pips and you're gone. If that's the case, I know of traders who mark their support and resistance zones on the 15 minute. And you can actually trade zone to zone on the 15 minute. So each candle is only 15 minutes. You're going to be in and out of the market a little quicker. Maybe you only want to take 2 to 3 trades a week and you want to do it on a higher time frame. The higher the time frame, the more pips you're going to get from zone to zone, but the longer it takes. So imagine entering a trade here, finding your pullback. Imagine being on the 4 hour, entering that trade here and riding it up to here. As long as you set your TP and your stop loss, you can absolutely walk away from that trade. I know people who like to take trades on the daily time frame, still doing zone to zone, but on the daily time frames. So what you would do, there's no difference. There is absolutely no difference. You come and you mark your zones the way we did on the 1 hour. You can mark them here. And you can trade zone to zone on the daily, meaning each candle takes 1 whole day. So if you did a buy here and your take profit was here, that would have taken 1, 2, 3, close to 4 days. And let's look at the pips that you would have gained from about, just ballpark, 70.50 to 72.06, roughly 150 pips over 4 days. Let's say you did this analysis on Monday. By the end of the week, you would have gained 150 pips off one analysis that you did one night. So there are definitely advantages to taking trades on this higher time frame, especially if you don't have a lot of time. If you're like me and you're more of a scalper, then I know traders, you can, do your zones on the 15 minutes and you'll be in and out of the market a lot faster. But the process is the same. So, yeah. Yes, that is correct, Henry. Yes, do your analysis on the 1 hour time frame. Now, definitely go on your back office because Coach Max goes over top down analysis for sure. To keep things simple, we did our analysis here on the 1 hour because you can figure out what the trend is. And then to get that entry as close to the zone as possible, you'll go down to your lower time frames to look for that pullback. Sometimes you won't get that pullback. Let that trade go. There's another one coming. Trades are just like trains. There's another one coming. To stay in the game longer, to keep your account as long as you can, you have to have trades with smaller risks so that when you do lose, you still have enough to trade the next day. So it's better to wait for a really good setup where your reward is bigger, your risk is smaller. And that's why it's good to have, 1 to 2 or 3 pairs. If you see a lot of consolidation, like this area here, maybe you go to EU or AJ, one of your other pairs, to take a look. If you have a couple of pairs, it also helps you have a little bit more patience, because if you only have one pair, and sometimes we get really antsy and we're ready to take a trade and we just kind of go in, even though it's not the best setup, even though that stop loss may be a little bigger than our account can handle, because we really, want to trade and we really want to practice, we take it. So having 2 or 3 can kind of give you more variety, so that if one pair is in consolidation, is going sideways, you can look for something that's trending. Trending markets are where we make the best trades. When price is clearly going up or it's clearly going down, those make for the best trade setups. And Neri had a question about which method do I use to scalp? Yeah, I have several methods that I use. The one that I really like is Sham's method, using the 10 and 20 cross of the EMA. That's my go-to scalping strategy at the moment. Any other questions before we go? No worries. Glad to help. Glad to help. So everyone, let's make sure we're jumping in TradingView. If you want to throw your chart into one of our impact discussions or study groups and say, here is one of the pairs that I've chosen, and here is my basic markup of support and resistance on the 1 hour, then absolutely do that, and we'll take a look at it. And don't feel like your chart has to be perfect. We just want you to practice and just get comfortable in TradingView. I think you'll feel better about your progress if you've been with Epic for 2 weeks or 2 months. You'll feel better about your progress if you are in TradingView, studying your pair and making observations. So let's see some charts. As Neri's saying, let's see some charts in the, either post them in the study groups or the discussion. And, it'll be a very supportive environment. And, it doesn't matter if you have 15 minutes to study a day or an hour. Once you get into the practice, and think about it, if you mark your chart up on Monday, there probably won't be that much change on Tuesday or Wednesday. So a lot of times you may mark up your 1 to 2 or 3 pair on Sunday or Monday, and it could last for the whole week. So we're not talking about a very big time commitment. I actually have TradingView on my phone as well. But in terms of marking up charts, I like to have a bigger screen on my laptop. But once I do that markup, if I'm outside walking my dog and I wanted to check on my trade, I can absolutely use TradingView on my phone to look at price action or to check on my trade. But in terms of marking it up, I like to use the computer. All right, everyone. So definitely post some charts in IOP, either discussion or study group. And that way we can see the pairs that you guys are trading as well. We have a big, strong community, and we want to talk about charts. Eventually, hopefully, we can all study even the same pair. I think that would be really powerful. But before we can do that, we want to make sure that everyone has the skill set to be able to pull up the chart in TradingView and throw some support and resistance lines. So that's my challenge to everyone. All right, everyone. Let's see those charts, and I'll talk to y'all soon. I'll get this recording posted to my YouTube, and I'll post that link tomorrow as well. All right, everyone. Good night, y'all.